Hello, everyone. Hi, how are you? And I am back. I'm back from some work overseas, and I hope you guys are okay. And for those who have just joined us, welcome to Traders Talk. And this is the first session for May, although it's 9th of May today. We have not been around for 2 weeks, and hopefully you guys are all okay, because basically for the past 2 weeks I don't think the market has actually moved anywhere. Okay, we can actually just check back where we have left you guys end of April, right? End of April, and then we had our last show, sell in May, go away, right? And practically, I think you guys would have probably believed that I have sold in May and went away, and we are back in May right now. Okay, good. So let's see. The market has been a bit. I would say whether you call it volatile or not, I would say probably not. But we have actually been moving up and about for the past two weeks. Yeah, for the past 2 weeks, and of course, we had the FOMC meeting early of May, right, 3rd of May. And the Fed have actually raised the interest rate by another 25 basis points as expected. And I'm not sure if you guys have actually followed us before this. There is actually, I think the music is still on. Okay, there's actually this CME Fed Watch, right? CME Fed Watch, where you can actually check out how and where the rates are actually expected to go. Let me just share with you guys again. If you have actually not seen it, right? Let me just share you guys. Okay, let me do this. Okay, CME Fed Watch is here. I'll put in the screen, the chat later, right? How do you get CME Fed Watch? Where is CME Fed Watch? Okay, CME Fed Watch. Okay, a bit rusty after a break of 2 weeks. Okay, all right, this is CME Fed Watch. Okay, and the website, I'll put down the chat just here. Okay, yep. So what basically this says is here. I think before this, we have actually mentioned that the chances of a rate hike 25% basis point is more than 90%, right? And of course, right now, what we are actually watching on is the expected rate hike on 14th of June. Yeah, 14th of June, which is basically next month, right? Next month, mid of next month. And then here is actually no change. 83.4% expected no change. In fact, if you have been watching this a couple of days ago, the rate was actually 90% no change. So it seems that the expectation has actually been coming down, and there might be possibility of another 25% 25 basis point change, because this side of it have actually gone up by maybe 7 or 8% compared to a couple of days ago. Of course, what we are going to watch is actually tomorrow's CPI. Tomorrow's CPI will actually be announced. And hopefully the inflation rate continues to actually come down. Yeah, and of course, as you guys have known, we have said for almost more than a year, the Fed's target is actually 2%, and right now the inflation rate is actually at 5%, and the interest rate is actually at 5.25%. Yeah, so basically the interest rate is actually higher than the inflation, which means that if you that means that the money, yeah, if you actually save or put your money in the bank, would be probably better for you to spend the money. Yeah, so that's why I mean that's how the Fed actually try to contract the economy by raising the rates so that we would actually spend less, and when we spend less, then inflation would actually come down. Yeah, but of course, along the way, what has actually happened is that a lot of people lost their jobs, uh, uh, and big companies, small companies have also cut jobs by the hundreds and thousands. Yeah, in fact, I think expected to actually go into millions. Yeah. But of course, last week, if not mistaken, the jobs report was also fairly okay. Yeah, fairly okay. That means that the job losses is not that bad so far, but I think it will actually become worse. I mean, because the banking sector has actually been affected by quite a lot. And also because of that, bank failures has actually come in, and the credit tightening has also actually started. And of course, when credit tightening starts, means that people cannot borrow money, and then businesses which is affected by the economic downturn, right, would actually need more funds to operate, of course, during bad times, right? And of course, when they can't get funds to survive, then that's the time where more business failures would actually happen. Yeah. Despite that, we also see that the market has continued to actually go up over the past months. And if you really look into what is actually happening, right, you can actually see that the whole market is basically pulled on by these big caps. Maybe I don't show you here. By all these big caps, maybe you see 3 months performance is quite okay. Okay, so if you look at the 3 months performance, right, for this is S&P 500. Yeah. So if you look at the 3 months performance of the top 500 companies in US, right? You look at the big green boxes. Yeah, the big green boxes are companies like Microsoft, which has gone up by 20%. Apple, Google, Meta, Nvidia, yeah, Amazon, yeah. These are the so-called big boys, which has actually been pulling the market. If you combine them, right, then of course they would actually contribute to a big part of the stock market. Yeah, of course, the other parts of it, you can actually see that there are still a lot of companies which are actually in the red for the past few months. Yeah, so I think once these big boys lose their momentum, right? Lose their momentum, and of course, what will basically happen is that the 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 uh, the big boxes will also become red, right? When the big boxes become red, right, then highly likely you can actually see that the whole market will actually also turn red. Yeah. So this is some form of cautious that the bull run right now uh, may or may not continue to actually how to say actually continue to actually go up. It may just be a bear market rally, a very big bear market rally. So be a bit careful in terms of really putting everything in and going all out, and don't get FOMO into buying stock at these levels. Yeah. Okay. And then what else I actually wanted to share with you? Yeah, let's get back to S&P, right? So as I said, the S&P 500 basically has relatively not moved much from end of April, where we actually left you, right? End of April basically is somewhere around maybe here, right? Maybe up here. And basically what happened for the last two rounds is that the earnings of the big tech actually drove the market up by quite a lot. Yeah. Earnings of the big tech. Firstly, of course, what has actually happened is that Microsoft Google and all actually came inside, I think somewhere right along here, right along here, my okay, right along here. Yeah, this was actually one major earnings push for the market to actually go up. And then, of course, what happened here was going into FOMC, the market has actually gone down. And of course, after the statement of Jay Powell to actually give indication that the Fed will still be data reliant to actually see whether they would actually need to continue to raise rates, and they have not said or confirmed that they will actually stop increasing rates. Yeah, and of course, as a result of that, the market has actually I won't say crash, came down a little more, came down a little more after the speech by the Fed on the 3rd of May. But of course, I think on Friday, if not mistaken, this earnings or Apple's actually gave a very good earnings, right? And basically that again pulled the market up. Yeah. So similar patterns for the past 2 weeks. Yeah. Earnings driven. I would say earnings driven. People tend to go hit the market, right? Earnings driven, then retracement. Earnings driven. Yeah. And of course, yesterday we also saw a bit of retracements coming in, and of course today I would say that the futures was also slightly red when I last saw it this morning. Yeah. So this is how the market has actually been behaving, and very news driven, whether it is earnings and whether it is actually so-called bank failures, PacWest, this and other banks, which basically has been in the limelight over the past 1 or 2 weeks. Yeah. So yeah, so that's the thing. As I said, the movements for the market in one direction has been short-lived. Short-lived, I would say. Yeah, short-lived, I would say. Yeah. And of course, like I said, like I always say, yeah, if you're in profit, take profit, and then basically reposition yourself and look at how to actually go about into the market again. Yeah. Okay. The Nasdaq is actually more or less similar. Nasdaq, you can actually see here. Nasdaq. Yeah. No. Yeah. This is Nasdaq. Yeah, Nasdaq. Okay, but Nasdaq, of course, because of the big tax, right? You can actually see that the price action has actually been quite not quite very bullish so far. This is actually daily, right? This is actually daily. Yeah. Let me clear all this. Mm, it has actually so far actually breached the level which we are actually watching, right? Because the last time we were actually looking at a range, right? A range of this range, this range. Yep. Yep. We were actually looking at this range, and basically what we said is that monitor the range between 12,900 all the way up to 13,200, 13,200. Yeah. And of course, this 13,200, I would say, would be actually a level to see if it will break up or break back down, right? Last week it actually break up above 13,002, and subsequently it actually came back down following the FOMC meeting, right? And on Friday, the market went up together with Apple, right? Apple earnings announcement. Then yesterday itself, it was also a bit choppy, but at the end of the day, it was also going higher, closing higher at the end of the day. Yeah. So this is day, right? Okay. So now it's actually sitting at about 13,000, close to 13,003. Yeah, 13,003, above 13,002. Yeah. So we would actually watch whether this week this week the price action would actually continue to go up, or it will actually retest 13,002. If it retests 13,002 and it bounces up, then highly likely we can actually see Nasdaq momentum actually continue to go up. I would not be surprised if it actually continue to go up. Mainly, I think the the uh, the Nasdaq counters results are actually not too bad. I think yesterday PayPal also announced results which are actually better than estimates, if not mistaken. PayPal, right? PayPal actually announced yesterday, right? Yeah. Let me see. PayPal earnings, yeah, it's green. I mean, I've not really gone into it, but so far they are above estimates, and I'm not sure what are their so-called next quarter's expectation. Of course, if they give positive expectations, right, then of course this again would how to say be positive to the Nasdaq overall. Yeah. So that is actually more driven by the earnings, and I would say not so much in what's really happening behind the scenes on the overall US economy. Okay, so yeah, so that's Nasdaq, right? And coming back to SPX, right? Okay, so SPX key levels to actually watch is 4,200. Yeah, 4,200 is one key level above, which we actually need to closely watch. And I think it has not managed to breach this level. I think since April, right? April, when there are actually a few times when it rallied up, right? But never near this level. 4,002 is somewhere around here, right? Yep. So this is actually 4,002, right? You can actually see it actually going up, trying to reach one, trying to reach two, and of course, right now again trying to actually push forward. Yeah, if it does not go up above this level, then again highly likely it will continue to actually trade in range. Yeah, so of course trading in range is actually not too bad, especially if if you are actually non-directional traders. Range trading is actually quite profitable. Yeah, quite profitable. And I think we have also been doing a lot of neutral trades over the past few months. And basically neutral trades on SPX so far has actually worked on quite well. And other neutral trades, I think, on commodities like oil, has so far also been quite well. If you have been following us on the series where we were actually getting free oil, right, free petrol, right, basically since October. Uh, we have been actually doing quite well on trading all stocks using neutral strategies. Yeah, although you can actually see that on the all side, sometimes it has actually moved by quite a lot, right? Because of certain news flows, like for example, OPEC has uh, agreed to cut production, then it had a spike, and then recently, a couple of days ago, again, there is a so-called flash crash on oil. Yeah, and you can see that basically it has actually crashed somewhere around here, right? It has actually suddenly came down. This is XOP, S&P Oil and Gas Exploration, the ETF. Yeah, so it has actually suddenly crashed down, but of course, after it has crashed down, it actually regained quite fast. I think after 2 days. Yeah, after 2 days from the after 2 days from the crash. Yeah, we took some positions also in XOP, and of course, if you followed us, we were actually doing some neutral trades on iron condor. So those trades are basically it is actually in profits. It is actually still in profits. Yeah. But of course, at one point in time, because of the crash, then of course, or the so-called lower side of the, uh, the the so-called neutral trade on the iron condor, right? It's actually tested. Yeah. And of course, on the upper side, upper side of the so-called iron condor, would actually go into a full profit. So on the iron condor side, we have the so-called bear put spread and the bear call spread and the bull put spread, right? So the bear call spread, because price was actually retracing, so on that portion of it would actually gone to almost max profits, and of course on the bull put spread would actually uh, be tested and probably went into losses when it was actually coming down here. Yeah. So again, we also shared with you guys how to actually manage such trades. And of course, when the price is actually so-called retracing down, right? Retracing down. So on the upper side of the trade would actually be very profitable, and the remaining extrinsic value would actually be close to zero. So basically what we did was we leg out of it. Leg out means that we actually closed that side of the trade to take profit. Yeah. Of course, once you close that side of the trade, you would actually see that on the other side, you would actually be in losses, right? In losses. Yeah. But again, we also look at the price trend, where basically there is some form of support on the bottom side. So we did not do any adjustments in those at those legs. Basically, we continue to keep those trades, and of course now, since it has actually gone up again, the position would have actually been improved. Yeah. Expiry, I think the expiry for the current trade is actually 19th of May, which is basically another 2 weeks. Yeah, another 2 weeks. So it is actually okay. Yep. So yep. So these are basically what has been happening on the market, and basically what has actually happened in some of the trades which we are doing, or we did together with you guys during the traders talk. Yeah. So today, I would actually touch a bit more on how to say on learning how to actually increase your probability of the trade. Yeah, how to actually use tools available on the trading platform to actually see and how set up your trades so that you can actually get a trade right on when you actually start enter into the trade with more than 50% probability of win. Yeah, and of course this is only how to say available when you are actually doing credit trades. Yeah, credit trades. And of course, if you are doing debit trades, you are mostly directional in the trade. Directional in the trade means that you want the stock price to either go up or go down. And when you do directional trades, then most of the time you would actually have a so-called 50 for 50% chance in making profits. Yeah, 50% chance in making profit. Whereas when you are actually you're doing credit trades, right, you can actually increase your profitability. Yeah, and because basically you are actually so-called taking also more risk. I won't say taking more risk. You are actually selling premium. So basically, you are insuring the other party's position. You're insuring the other party's position, and of course, as a result of that, to pay you as an insurer, they need to actually give you a higher probability of winning in the trade. Yeah. So that is basically the so-called conceptual difference between buying an option and also selling an option. Yeah, when you actually sell an option, the probability of you to win in the trade is actually higher. Yeah, is actually higher. Okay, going back to the tools, what kind of tools is actually available? And let me go to the trade platform. Trade platform. Um, okay. Okay, let me go to the trade platform for you. Let me share. Share screen. Uh, Okay, so this is actually a tasty trade platform, right? Okay, you can actually use any platform, but basically the most of the platform would actually be more or less similar. The tools available are also available in most platform. Okay, so of course, tasty trade platform, I would say it's easier to navigate if you're actually looking for some of these so-called tools to actually help you in terms of setting up trades and also looking at what are the probabilities of you to actually win in the trade, to check it before you actually enter into a trade. Okay, so firstly, of course, this is actually the options chain, and one of the key things which we actually watch before we enter into any trades is to actually watch for the expected move. Yeah, and let me choose a stock. Let's choose Apple, for example. Okay, so if you look at Apple, right, Apple is actually currently trading at 173. Okay, so and then you can actually see, let's say for example you actually want to choose to trade on 23rd of June, right, 23rd of June. So you click 23rd of June. What you can actually see on the right side of this thing is actually a figure here, 8.55. 8.55. Okay, so basically, first thing is 8.55 is actually what we call the expected move of Apple price from now until 23rd of June. Okay, it will either plus, that means go up by 8.55, or go down by 8.55. Okay, so this is actually one tool which you can actually gauge the what is the expected move of Apple. And of course, why we actually see this expected move is also to so-called choose the strike price where we actually want to trade, and of course, if you are doing, if you are actually selling an out of money option, right, you would actually want to sell it outside this expected move, or at least on the expected move, so that it on expiry it won't actually come to that strike or get in the money. Yeah, for example, 855 173 to 855 is how much? Let me count. 173.5 plus minus 8.55, 164, right? So basically, you're saying that Apple might drop down to 164 by 23rd of June as one possibility. Yeah, one possibility. So basically, you see that 164 is here, right? 165. So if you do a trade, then of course, I would actually choose a strike of 160 as the strike if you actually want to sell a naked put. Yeah, because 160 is actually out of this expected move. Yeah, and basically you can actually see that what is the probability of you to win in this trade. You can actually see on the right left side here, which is 84%. Yeah, 84%. Yeah, so like I said, you are selling options, right? You will actually get a higher probability. You can actually set up a higher probability or whichever probability you want. If you are selling options, here you can see I have an 84% chance to win in this trade. Okay, that means by 23rd of June, yeah, I will basically collect this 143 into my account safely. 84% chance, so that is more more than the 50-50 chance, right? Okay, so that's one how we actually use this tool to set up trades. Of course, if you say you just want to go right to the so-called expected move of 165, right? Then you can actually still do it here. Then you will actually get paid more premium, 225 instead of 143. But your chances of win actually goes down from 80 from 80 83%, right? Sorry, no, sorry. This was here from 84%, right? From 84%, you actually go down to 76%. Yeah, so your probability of win actually changes if you choose a different price. Yeah, so this is one tool which we actually use within the trading platform to set up trades. It can be any strategy you want. If you're actually just saying that you actually just want to buy a call, right? You just buy a call at 175, which is the at the money price. Then basically you can see your trade probability here is only 30%. less than 50, right? Yeah, it's only 30%. Yeah, because I think here is because now the price is actually 173.5, right? 175 is actually $2 higher, so that's why the thing is different. If you do another one, no, Apple goes by the strike of five with. Yeah, it doesn't go by a per dollar. Yeah, it's already a big boy, right? So it moves by five and not single dollar. Yeah, so that's again how you actually see the probability of win on day one, even before you actually enter the trade using the tools in the platform. Okay, another tool which you can also use is actually somewhat to actually test strategies to see what type of strategies works well with a particular stock. Works well with a particular stock. And for example, I will actually show you within this website, you can actually test strategies. Let me just okay, you can actually test strategies. Let me go here. Oops. Okay, again, this is actually Tasty Life website, right? You can actually use this. I'll post down on the chat how you can actually access this. You need to just register for an account for free, right? For free, you can actually register, and then basically you can use this to test strategies. Okay, so how to actually use this, right? Once you register, you can actually log in. Then you can actually do things like back testing on strategies. Okay, so lately, I think we have been also covering some besides the all stocks which we are actually trading on neutral strategies. Then I think we also spoke about trading gold on when IV is actually high. When IV is actually high. In fact, I think before the FOMC meeting, we also traded gold when there had actually been an IV spike. In fact, the IV spike for gold actually came in quite late. Okay, so we have actually entered a bit early when the gold IV was actually uh, slightly around 40. We have already entered the trade the day before FOMC. But towards later the night right before FOMC, actually the IV for gold actually went up, I think 49 or 50. Yeah, it went up even more, you see. It went up even more. And of course, after FOMC, if you look at the IV of gold today, it has actually gone down to it has actually gone back down to 44. Yeah, so the IV crash came in also quite late. Yeah, it went up late. It came also came down also late. Yeah, so of course because CPI is again coming tomorrow, right? That's why the IV for gold right now is still at 44. So watch out for the IV spike again. Of course, if it spike above 50, then of course you can still do some trades in gold using so-called neutral strategies. If you are a bit more aggressive, then you can actually do a strangle. A strangle is basically selling a naked put and selling a naked call. Okay, so naked calls are very dangerous if you do not know how to manage it. And of course, in our newsletter this week, right? In our newsletter this week, we have also spoke about this gold strangle. Yeah, gold strangle. You can actually go and read up gold strangle, how to actually set up a gold strangle, and basically what are the risks you are actually taking when you do this strategy. Okay, as long as you understand what is your risk and how to manage it, so it's okay to do. But I would advise you not to do this type of trades on normal stocks. Normal stocks, like for example Apple, Microsoft, all these kind of stocks. Don't do a naked call. ETFs is a bit safer because the sudden spikes or sudden movements for ETF is less likely than normal stocks, because normal stocks might be influenced by earnings, might be influenced by news and all these kind of things. Yeah, so I would tend to do a bit more onto commodities for more risky uh, strategies like this. Yeah, even SPY I would tend to shy away because SPY movements can also be a bit dramatic at times. Yeah, like the other day I think it went up by $7 or $8 in a day. Yeah, in a day. Right? Whereas for gold or some of the commodity ETFs like oil, it can be the movements are less sudden. It can also move big, but of course, once it moves big, they tend to snap back after a while. They tend to snap back after a while. Yeah. Okay, so again, how to actually use this as a tool to actually see whether your strategies are working or not is just this. Yeah, so once you actually enter this, there is actually a date where you can actually test how well your strategy works. For example, let's do go, right. Let's do go. You can actually test it maybe all the way for uh, a year, let's do a year, right. Let's put it all the way from January 1st 22, right, and then you can actually put the duration up to now 9 May, right. Short triangle, delta 16. Okay, if you're doing a triangle, then the best optimal is actually do a triangle at delta 16. Yeah, of course delta 16 will actually give you a probability of maybe close to 60 over to 70% probability of profit. Yeah, and then after you put in this one naked put and one naked call, delta 16, expiry date, normally we would actually do a 45-day duration, because this is the time where the options value would actually decay the fastest. Yeah, 45, within 45 days. Then just you can do other things like whether you want to exit early, whether you want to have a stop loss, what are the take profit scenario. But basically I leave that as new lah, just to do this back testing. Okay, let's just do this. Then of course, once you click the run strategy, then you can actually see that what is the win rate of this strategy, and at this delta and at this expiry date. Okay, so the win rate is 78%. Yeah, and basically from 1st of January 22 until May 23, the total trades which you can actually enter is 40 trades. Yeah, largest profit is actually in March, where you earn 261, and then the largest loss is 652 in March 23. Yep, March 23. Okay, so these are the data which actually comes out. Then of course, what is interesting is for me is basically this premium collected. What is the average collected? What is the median collected? Basically, this is just to see for this triangle on gold, what is the so-called target which you actually expect to collect as a so-called benchmark when you actually do the live trade. Yep. And then profit per trade, basically on average, you're actually getting $39, $40. And of course, on a median basis, you will actually get 126, 126. Yep. Okay, and then days in trade is more or less to hold held towards expiry, which was what you actually set here, right? You are not going to exit earlier. Okay, and then the profit per day basically average is 93, and median is about 293, which is basically $3 a day. Yeah. So once you test this, you can actually see, okay, that this stock or this counter has this kind of history, then basically you can actually go into testing out this trade with comfort with a bit of comfort that your win rate on this strategy is 78%. But of course, at times, then there would actually be situations where you will also go into a so-called big loss. Yeah, like this, it says that in March 23, the max loss is $652. Yeah, but of course, this is also on the basis of no trade management, no trade management. Yeah, the back testing. Yeah. And of course, then you actually need to see what really happened to the gold stock in March that has actually resulted in a so-called big loss. Yeah, to see the event. Basically, you try to research and see what really happened there, whether there's actually a big fall or a big get up in the price. Okay, then you actually learn from there to see if that happens. Basically, what you can actually do to manage your trade. Yeah, but of course, if you are doing trades like strangle, then you probably need to also go into some form of active management to protect your position. Yeah, if the stock price actually comes down, means that your put is actually tested, then you need to manage your trade by rolling down the call, or if the price is actually testing on the upper side of your call, right, then you need to actually roll up your puts. Yeah, so these are basically the trade management which you need to know to so-called also try to avoid this kind of large loss in strategies such as a strangle. But of course, if you do other strategies, then like an iron condor, then there are actually different types of trade management for iron condors. For example, your rolling duration. Most of the time, the trade management which I do for iron condor is rolling duration. That means I extend the duration if one side of it is tested. And of course, earlier I've also said that if one side of the trade is already going into max profit, then basically I will also leg out from the trade, right? Leg out from the trade, in case to take profit first, and of course in case the price reverse to reverse on the other side of the tested, on the tested side it reverses, then you can actually also come out from the trade earlier, because there is no opposite movement that will actually take the profits away. Yeah. Okay, so of course this is how you do it, and then of course if you actually want to learn more, you can actually also go into the simulation page. Simulation page is actually a more detailed one, which basically also goes towards respective what is that expiry date. For example, let's say F1 CPI is tomorrow, right? CPI is tomorrow. You actually want to test a strangle. If you actually go in here, right? Is that the case? Yeah. If you actually go in here, let's say 45 days, 45 days, and you do put 188, you do a so-called 16 delta, which is actually here 179, and then what else? 16 delta is 179, and up here is 17. Yeah, 1202. Okay, so you do this strike. I press already, is it? Okay, and then how do I analyze it? Where's the button? Premium 210, and then possible outcomes. What is it? Possible outcomes. How to actually see this? Is here, right? Possible outcomes. Profit zone. This is a profit zone. Get probabilities. Where's the probability? Move through the date buttons to see probability making specific profit or loss. Oh, so you move through these states. This one I have not used it. They have actually upgraded this one a bit, but you can actually test it out how to actually use this. Yeah, but the basic back testing is the core thing that I will actually use to test the overall probability of that strategy over a period of time, how well it has actually performed. Yeah, so that's the tool which you can actually use. Okay. Yeah, so these are some of the things which we do and we see before we actually get into the trade. Yeah, because if we are doing credit trades, right, we actually want to increase our probability of more than 50%. Yeah, so by doing this, by doing some homework, yeah, then of course chances are for you to actually generate consistent income using a particular stock or an ETF would actually be higher, be higher, and you don't have to actually also worry so much in terms of the so-called temporary price movements, because you know over time, right, basically how this so-called stock perform using a selected strategy or its price behavior in the past. How has it actually been? Yeah. Okay, so yeah, so that's what we actually wanted to share with you today for the topic. Don't guess, use probability. Yeah, because if you're guessing, then of course your chances are only 50-50. And of course, if you learn how to use probabilities to your advantage and do some of the so-called background work, which I've actually shown you using the tools in the platform, then of course that would actually help you out in increasing your profitability and getting more chances to increase your profit expectancy. Yeah. Okay, so yeah, so that's all I wanted to share with you guys today. And of course, if you have any questions, do put in the chat or send us an email. We would answer these as soon as we see the email or the questions. But of course, don't forget to like and share our show. Yeah, because it does great help for us to actually get more people to write on to our show and also our newsletter. Yeah, and of course, I think if you are following us on the newsletter, um, for this year, basically, we have actually migrated our platform into a Substack platform. Substack, yeah, and of course, this platform has so far worked much better for us than the previous platform, which was actually under Twitter. Yeah, which was actually under Twitter, because we actually grew our so-called network from basically about 3 or 4 countries, right, to now basically about 10 or 14 countries, if not mistaken. Yeah, our newsletter reach. Yeah, our newsletter reach. Yeah, so that's actually also beneficial if you actually use the correct tools, right, in terms of trying to either grow your audience, whether you are going to trade, right? If you actually use the wrong platform, right? Like we did using the Twitter platform, right? We basically uh, did not grow our audience so much because the platform was somehow very weak in actually promoting the newsletter. But of course, with your guys' help to actually disseminate, share this with more friends, right? Then of course that's where we can also grow together, and hopefully by doing that, I can also give you guys more contents, more contents, and basically share more knowledge to you guys so that we all can actually benefit together. Okay, so happy trading. Watch out CPI tomorrow. Yeah, be light in your trades, and may may the market be with you guys for me. Yeah, don't go away. Yeah, so stay on the markets. Just trade lightly, and don't rush into trades. And use the tools to actually create high probability trades for you guys. Okay, bye bye.